So we're working on talking about solutions for the agricultural sector here. I thought it was really interesting today, or yesterday, we had a really interesting presentation by Netafim. I guess everybody here obviously knows who they are. But it's really interesting, I think, that they started out a small company here in Israel working on drip irrigation. And obviously we all know they sold for $2 billion just recently. So I think that one thing we'd like to explore here is how can we find and create more companies like that in this sector. And in doing so, how can we help solve the world's food issues that we have? As I mentioned, we have a great panel here today. Quick background on myself. I'm Mark Thompson. I'm a partner with Sidley Austin. I'm based in London, despite my American accent. We are a leading global law firm that does a lot in this particular sector. We are a full service law firm with offices all around the world. I personally do a lot in tech, AgTech, and the life sciences area. But enough about that. Why don't we start by having everybody in the panel introduce themselves. Start on my left. Pass the mic down.
Good morning, everyone. ARAMA KUKUTAI, Kiwi, venture capitalist based in California, founder and partner at Finistere Ventures, a AgTech focused specialist VC firm. Also farmer, dairy farmer, and long-time Aggie. I've been coming to Israel since 2000, working on AgTech opportunities, and proud to be part of the OurCrowd ecosystem.
Hi, TZACH. I actually joined the Ag family exactly a year ago. My background is kind of diverse. I've been started at the Israeli Air Force as a pilot for 7 years. After that, I've been a computer science guy, programmed for Intel Technologies. Then I joined a VC here in Israel. And after that, I founded my own e-commerce company. So I've been an internet guy for about 7 years and recently joined CropX. This is CropX. This is our product. Talk about that a little bit later. That's more or less about me.
Hi, my name is OFIR SCHLAM. I'm the CEO and one of the co-founders of Taranis. My background, I come from a farming family here in Israel. They've been growing in, those of you know, Nahalal and Genosar for the last 4 generations, and mostly wheat and cotton. So that's kind of the family background. I didn't join that business, and actually was more fascinated with technology. So my entire career was in Israeli intelligence, and then starting Taranis. So my background is both ag and computer science, all these topics. So for me, it's a really natural merge to have started Taranis to focus on AgTech. So more on that later.
Rafi Herman. I am a scientist by training, but been working in ag for a long time. Currently working for a big ag company. I think we are called now Dow DuPont, the agricultural division of Dow DuPont. I'm formerly a DuPont Pioneer employee, primarily working on corn and soybeans. As I said, scientist by training. I was trained about a mile south of here in Givat Ram.
Last speaker.
Oh, perfect timing. There we go. So throw you into the fire right away. Quick introductions.
Morning, everybody. Sorry. Hopefully soon we will have a train and those traffic jams will be alleviated. So Jonathan Berger, The Kitchen by Strauss. It's the first food tech incubator in Israel and one of the very first around the world. It is owned by the Strauss Group. So it's a single LP partnership. And it's backed by the Israeli Innovation Authority, which used to be the chief scientist.
All right, so why don't we start by setting the stage as to what AgTech actually is and maybe more importantly what it isn't, and a little bit of the background. So Armin, you want to take that away?
Sure, I can do that. I think we have some slides. Are they up here or controlled down there? Sorry, guys. While we're getting the technology organized, AgTech is it's an interesting segment and one that's really, despite in some ways being one of the oldest industries, agriculture really has been behind the curve in terms of particularly innovation capital. Wow, I didn't know we were launching missiles at the same time. Nope, that's not us. Anyway, you can get the car advertisement while we're talking about ag. But we've seen in the last, particularly the last 5 years, a big run-up in the amount of capital going into AgTech. And one of the comments, or questions I get asked regularly about this is, are we at a height point in terms of AgTech investing? And last year the number was just over 1.5 billion in US went into AgTech VC. So technologies up to the farm gate and supply chain. And really over the last 5 years, we've seen probably close to somewhere in the region of 4.5 billion of AgTech VC. But to put it in context, in 2017, FinTech deployed 16 billion, and AgTech deployed 1.5 in a sector that has $3 trillion of GDP value up to the farm gate globally. So I think if you put it in context, actually AgTech is still massively underinvested from a standpoint of other capital sectors and technology. It's also a horizontal, not a vertical. And so just about any type of technology, we have a couple of CEOs from co-investment companies that we have with OurCrowd here on the panel today, but there is a plethora of technology opportunities from life sciences to material sciences to digital and even into financial technology or fintech. We noted last year in a study that we did together with the financial organization PitchBook that there are about 350 active investors, institutional active investors working within the AgTech space who are writing checks of, let's call it Series A scale or greater. We also saw in 2017 a market shift towards later stage rounds dominating the total dollar value of investments being made in the space, something that really hadn't occurred up until now. And I think we generally see it at Finistere as a sign of maturing of technology investment in the space, and one where I would expect to see 2017, which was a record for VC, broken again in 2018 and probably in 2019 in terms of the cycle that we're now in and the number of companies that we see coming through. In the last 10 years, there have been something around 4,000 AgTech financings that we identified in our PitchBook report. But last year, by far, when we look at the number of activities and investments taking place in Series B, Series C later stage investing, by far the biggest year, marked by a couple of fairly significant venture rounds. One of our companies, Plenty, raised an over $200 million Series B. A company called Indigo raised $205 million. And while those are somewhat outliers, the average round size crept up to sort of north of 25 million in terms of average venture financings. So this is just to give you a sense of the landscape, facing AgTech. We've worked very closely with OurCrowd, who obviously have a focus in this area as well. We're invested in a couple of companies with them, continuing to look at others that are in the space. But fair to say, I think this is an area that understandably those of you who heard John Medved talking this morning about key sectors for OurCrowd, it's pretty clear to me why AgTech is one of those, and particularly pertinent for us when we think about the Centre of Excellence for AgTech research that exists within Israel. This is, I think, outside of North America, by far the most active from a deal flow standpoint, and also very high quality, high caliber entrepreneurs and technologists working in the space. So Mark, I'll pause there without the slides. We can probably circulate those afterwards.
Okay, excellent. So you talked about AgTech. Is there a difference between AgTech and food tech? And I think I'd probably look down to you to see if we have a difference.
It's not a difference, it's coexistence, because the way we look at it, the food industry major intake or inputs are the commodities coming from the agriculture industry. And there is a lot of, I would say, influence of all the trends. First of all, the food industry is very much influenced by the price of commodities. And with scarce resources, looking forward, it's a must for the AgTech to flourish and to make sure that those commodities stay at the levels that they are. Otherwise, the food that we all eat would just be too complicated to consume, and we saw that in the past. I think a very interesting, I would say, collaboration or connection between the two areas, now that we understand that it's a continuation one of the other, is something which is called cellular agriculture. And I want to ask the crowd, has any of you heard about cellular agriculture? Just a few. So the idea is that with the trends that we as consumers now are seeing, that we like to eat meat, but we don't think that meat is good for the planet in the sense of the, I would say, the resource, the natural resources. I'm not talking about ethical problems. And we still want to consume meat. So there is a clean meat area, I would say, or sector that is based on high-tech technologies that are coming from tissue engineering. And the idea and the meaning of cellular agriculture is you take a cell, a single cell, let's say that in this case this is from a cow, and you grow it in a lab. The same way that you would eliminate killing cows in order to eat meat, the same way you should be able to eliminate cows from drinking milk, and there are technologies that allow you to produce milk the same way using cellular agriculture and grow the cell of the lactose, the protein that is part of the milk, in a fermenter and then in a bioreactor. So cellular agriculture is a very important sector of the food that is, I would say, continuing and helping the agriculture area to adapt to the demand of consumers.
So since you started with expanding on cellular agriculture, I think one thing that we need to be cognizant of is that AgTech is not a singular entity, right? Different, for example, veggies are different from row crops or commodity crops and permanent crops, and they're totally different than ARAMA's dairy farm, okay? And the needs will be different in each sector. So I think we need to be a little bit careful when we envelope AgTech as a single entity.
Since they are different entities, are they different investor bases? Any thoughts from anyone on the panel on that, or is it the same investors that you would see investing across the entire spectrum?
Comment on that, I think. If you look at food and AgTech combined, the number of investment dollars more than doubles. So there are clearly many investors in the food tech space, distinct from those in AgTech, but there is considerable overlap, as Jonathan said. I think one thing that I'd pick up on Rafi's comment, another way of looking at AgTech is along the supply chain. So the $3 trillion number is really up to the farm gate, but it's more than double that number again when you go through processing and all the way through to CPG, packaged goods. So, for example, Finistere, we're not an investor in CPG products, but we are investors in the supply chain. We know a lot of investors in the CPG side, but it's a different skill set. Launching, let's say, a new alternative milk product or Impossible Food burgers. I'm going to stick with my Angus, by the way, since I can. But I think that from a standpoint of the investment dynamic, yes, when you look at the entire sector, it's a much bigger number.
Just to build on ARAMA's comment, we've seen recently in food tech, almost all the large food corporates opening their corporate VC to expose themselves to new technologies, to new brands, this is CPGs, but also to new product concept. And I think this is a major shift that we just seeing the very first steps of. And an interesting statistic is that 70% of the growth in sales in Europe in the food sector, all sales in food last year, came from non-big companies. 70% came from companies that are not in the top 40. And this is a major threat to the large food companies, and therefore they are very active in opening these corporate VCs. So in that sense, the investors are, some of them are the same, but there is a group of investors that is completely different.
Okay, well, let's switch gears a little bit from the investors to the actual startup companies. And let's start with the question of what are the biggest challenges that are faced by startups in this sector, whether it's here in Israel or really anywhere else in the world. OFIR, should we start with you with that?
Yeah, thank you. So just to give the context of our story here, so Taranis is in digital agriculture. It's one vertical inside this horizontal arm I mentioned. So we are a full stack company, means we're developing hardware and software. The hardware is mounted on planes and drones to capture sub-millimeter resolution images. That means we can count insects, diseases from a plane while going at 200 kilometers per hour. That's the technology. Of course, then we have enormous scale of data that we have to make sense of. The farmer is not going to go through every leaf in his farm. So we are using deep learning to analyze all the data we capture. So, of course, we have a lot of different technology risk along this development process, as developing hardware, and deep learning is relatively new technology, enormous data sets that are needed. So all of this is some challenges any AI company faces, and especially in ag, to be able to collect that amount of data is a challenge. And we're happy that we have this edge of being able to cover more than 1 million acres every month with just one camera system on one plane, because we can fly at these kind of speeds. So that gives us some scale to work on. And then, of course, the bottlenecks is how to annotate this kind of data, and it's more of a AR problem like autonomous car startups are facing. That's on more on the tech side. Of course, we also, as being in AgTech, we have the AgTech specific challenges that I think are common to I think any startup in AgTech. One of them is the time to market. Most startups in a few other sectors like advertising technology and cybersecurity, which are really successful here in Israel, they can build their MVP product that can start making revenues in months. While in AgTech, it could take years to get to recognition by the farmer. So a startup needs to think really well how it's going to build these milestones and who's going to fund these different milestones until it can reach these points, kind of proof points that technology actually works. So I think that's the major challenge. It's not competing with other startups for the same market. I think it's being there enough time with the right technology, working with the farmers very closely until you can really crack what is the product itself and why did the farmer benefit from it. And usually farmers need to see that at least for 2 seasons before they actually believe it 100%. So I think one of the major challenges.
All right. Tomer, do you that?
Yeah, so I totally agree and want to perhaps elaborate on the channel thing. And I think that, and this is very specific to ag on one side, but on the other hand, it's very also, you see this with many Israeli startups. The technology thing is we kind of get that done relatively quickly. But then marketing and getting into the United States and international markets becomes a bit more challenging. And something that I see specifically with agriculture, how are you going to sell? How are you going to get to each and every farmer? So naturally you can have a sales team that goes kind of try to win a farmer one by one, which is very challenging and typically not scalable or not a VC story, if you will. And the challenge then is to find alternative sales channels. So many startups just try to sell to large corporations, whether it's companies such as the large food producers or food processing companies, or whether it's insurance companies that do crop insurance and so forth. So there are so many of those companies out there, but typically the sales cycle is very, very long and takes you need a lot of, in Hebrew we say savlanut. So that's another channel. What we're trying to do specifically at CropX, I think CropX is relatively well positioned because we have this product that is installed by the farmer compared to other soil sensing technologies. that need to be installed. They typically take half a day of an installation, which is very complex. And what we're trying to do here is create a very, very simple product that can really be shipped to the farmer, installed by the farmer in less than 5 minutes, and very easy to understand and deploy. And therefore, once you have that, we're looking to develop other channels, such as online, for example. And we already have farmers getting to our website, just clicking all the way through the shopping cart and taking this home and using this. So that's another, I think, an example of channels that work very well in other industries and are now new to the market or new to ag. By the way, I think I read that the statistics says that the average farmer in the United States is 59 years old. Every time I went to visit our customers this year, most of the people I've seen are younger than me. They have very slick new iPhones. They have Facebook pages. They buy on Amazon. Essentially, most of them are second generation or just hired farm managers, and therefore, I think that we're looking at new channels into agriculture. I think I more or less covered what I had to say here.
So, quick follow-up question on that. You guys both mentioned some of the longer sales cycles, and then it takes a couple of years to get your products out to market. From the startup perspective, have you found that your suppliers of capital are patient and wait for that to happen? Or have you found that they are insisting on a liquidity event sooner than you all might want? Or maybe you want a liquidity event sooner than later. You want to respond to that?
Yeah, thanks. So I think it's a good comment. And for us in Taranis, really focused on finding the right investors in each stage. So when we were just starting out, in fact, we did over a year, just the 4 co-founders in a bootstrap mode, just in order to really prove it to ourselves first. And we managed to reach 2 paying clients, one in Russia, one in Brazil, to really prove that we understand enough about the market and we can get started. And then we could get the trust of investors. So our seed round was led by OurCrowd first, and SCHLAM Ventures. And luckily, SCHLAM Ventures are really focused on AgTech. They had a few exit events in the past in AgTech, so they really had this patience. And OurCrowd as well had already co-invested in other AgTech startups, so they're both well aware of these challenges and could help us to actually plan ahead for these challenges. And even more so in the Series A, when we wanted to scale up, but there was only the very important proof points, but it's not scale yet. And ARAMA with Finistere and Vertex leading the next round really helped us to really make a plan that to use these funds the right way to be able to get to enough proof points. So I think it's really important. The take-home message here for new AgTech startups is really choose the right investors. And sometimes you can't be picky about it because you want to get started and build the product. But as much as possible, try to find investors that have this experience to help.
Any other comments? Maybe from a strategic side, do you think you maybe have a longer investment horizon than the funds themselves, or any comment on that?
You would hope so, but I'm not sure that's the case. I think that we are slightly more patient than most. And I think that there is a lot of work that is going even before the investment, talking, discussing, guiding potential investment targets to help them even before they're actually in the strap boot mode, for example. Okay, so their proof points, as OFIR says, are more successful and will help us to persuade that they're going somewhere. Cycle of product development in our industry are really, really long. Okay, so for example, Dow DuPont Agricultural Division, we are dealing with seeds. Okay, we are selling seeds. So for example, corn, soy, transgenic seeds from the development or the discovery to first sales could be 15 years. Okay, if we are dealing pesticides that we are working on, could be 10 years. So if you're talking biologicals, which is kind of the new trend these days, slightly shorter, the question. So we are more accustomed to being patient, but I think VCs, and I'm not part of it within the broader corporations, but I think that some VCs, corporate VCs, might have a little bit more patience.
I think also I have one more comment to add about another challenge that probably Rafi can also elaborate more on is how it all plays into also the trends in the commodity prices, even like the bigger macro trend. Because a startup can have a really great product, but at some points in the cycle, like today maybe, is very low prices of commodities, and farmers really are even more than usual skeptic about new solutions and spending money on new solutions. So that is another thing to keep in mind, that you might be doing everything the best you can, but you still just don't in the right timing for the market. And then again, you have to plan how to mitigate that risk again.
So just to continue in this line, okay, and I think it ties back to my initial comment on what is AgTech or what is agriculture, right? So, for example, OFIR is talking about broad acre crops like corn and soy, okay, which are slightly lower value, pressure on prices, right? So people will think, versus, for example, your sensor that is maybe super duper ready for people who actually irrigate their field, right? So somewhat higher value crops. So there are different markets, different requirements for different things. So when a startup starts thinking, they better understand exactly what the market is and what they're trying to, what problem they're trying to solve. And how you put.
Just by way of, sorry, is this working? It's working? There you go. Okay. Can everyone hear me okay? Yep, perfect. So, just a couple of add-on points to this. Firstly, I've got a very different view from strategics on this. Historically, more than 90% of exits occur through M&A from a very small group of acquirers. That's not going to be the case going forward into the future. The world has had $11 trillion of new capital entered into the capital system since quantitative easing. That's ended up in a number of hands, including investors who are non-traditional AgTech players who don't necessarily say, I'm happy that things take 15 years to get to market, that are actually much more impatient, which is a good thing from an innovation standpoint. Because our old industry, farming, which is, as my colleague Matt Bernard from Plenty says, the only major business still manufacturing outside, has to deal with a whole set of issues and challenges that don't beset other technology-enabled industries. But thankfully, entrepreneurs and innovation capital is coming to the rescue here. I think we're going to see major disruptions occur to the AgTech supply chain over the course of the next 5 to 10 years. In retail, also in finance, where there's some pretty archaic lending practices and insurance practices. And there's really 3 major revolutions going on here. There's a data revolution, so we have more data available to us than we've ever had, real time, in farming than has ever been the case before. Secondly, a genomics revolution, which continues in seed, in biologicals, and indeed in cellular food. And then thirdly, automation. So we haven't talked as much about this, but we had a mechanical and industrial revolution take place, especially in broadacre crops. We're doing some work at the moment with robotics automation companies focusing on how do we replace the impending huge labour shortage that we have in California, which is the largest producer of high-value vegetables, fruits, tree nuts in the world. And yet we can't find enough labour that can be paid adequately to go and, for example, pick strawberries. So these 3 challenges, these 3 areas alone are going to drive an immense amount of additional innovation on the product side. But I think we haven't yet begun to see the actual innovation on the financial market side. in this sector, especially from, as we've seen in other sectors, companies not going public or doing M&A, but building themselves on fundamentals and being able to get access to and this is a feast rather than a famine, right, in terms of the availability of capital out there at the moment. So for the right entrepreneurial teams, there is capital available to build, fundamental companies. So just make those points.
Thanks. So I would like to add three things. First of all, Rafi, I think you're right about our sensor being super duper. Just to add to the channel thing and what OFIR said, I think that another thing that at least we encounter is seasonality. You have a very short season with ag, especially with commodity and the broadacre crops. So I think that the solution for that is essentially going internationally, especially to the southern hemisphere. So essentially you open another season. And in terms of the investments here, I want to give my own perspective as someone who came from outside of ag. So I was a VC and I fundraised for companies in the internet industry. For me, fundraising for CropX has been easier than any other company that I've ever fundraised for. I don't want to sound arrogant or anything like that. It's never easy, but it's easier. And I think that that's for several reasons. First of all, I think a lot of investors, at least the investors that I see, are looking for impact investing. And I think that AgTech is exactly kind of right in the middle of that space. So that's for one. In addition, I think that agriculture today, or AgTech, it's huge, and the potential is huge, and it's very underserved in terms of technology and where it's at the moment. And I don't think it's a bubble, and I think that people realize that. So if you take that all together, I think that it kind of brings a lot of capital or potential capital to the table. So I very much second what ARAMA said about, for the right team and the right company, there's a lot of capital available there.
One thing I want to share with you in the food tech is that the demand is there. We talked about the food corporations need to disrupt their business because the consumer changed their habits. I agree. Similarly, the capital is there. But what we are lacking, to be honest, is the deal flow. And this is a major challenge because here in Israel, being startup nation, we see other sectors, and there is a lot of talent going to areas like big data, cyber, insurtech, and others, while we think that all those technologies can be applicable to the food industry. In our portfolio, we have 10 companies, and yes, they are food tech, but all of them are not food technology in the sense that this is one company that does robotics and uses machine learning, and another one that does personalized nutrition and uses big data and AI. So what we are trying to do is to bring new entrepreneurs and capable teams to go from other sectors and from other verticals to this promising vertical where the demand is there, where the funding is there, and to come apply their smart technologies in food tech.
So continuing from the investor's perspective, we started off by saying that this was a underserved industry in terms of the amount of capital, the size of it is at 1.5 billion. We also just heard that deal flow may not be there. So is the issue that there are not enough companies to invest in? Is there not enough money going into the sector? Or what is the structural issue that's causing this to be underserved?
Well, I think firstly on the deal flow side, food tech and ag tech, as we said earlier, a little different. We're overwhelmed with deal flow. We've got more than 2,000 deals in the ag tech space in our pipeline, and we've got 11 under active due diligence. We closed 3 in the last quarter, Series A venture deals. So it's a high watermark in ag tech from our perspective. I'd say the deal flow is up 5x what it was 5 years ago. High quality companies remain in short supply. This is like investment is generally. This is still a human-driven business, and so really what you're investing in early stage companies is the talent in the company. They're not real asset backed. And so a big part of our job actually is figuring out whether we can work with the talent in the company and whether we can grow and scale that company non-linearly. Those remain difficult propositions to find. That's why you need a lot of deal flow, to Jonathan's point, to find really high quality investable companies. I mean, one thing that is interesting is that the number of publicly listed companies in the United States has basically halved in the last decade. So the founder of Blue Bottle recently, when they sold to Nestle for nearly 800 million, said the only way to go to hell while still being alive is to list a company. And so there are a lot of entrepreneurs who don't want to list companies, want to find alternative ways to grow. And I think that's one of the challenges that we do face, is figuring out what the new business model in venture investing looks like. There will still be a huge amount of M&A activity, no question, whether it's in big food companies or in groups like Ruffy's and others that are in the AgTech space. But I also think the best entrepreneurs we come across are also thinking about what's maybe plan B is plan A. How do I build a fundamental company to address the most sort of, in a way, non-technological sector? I mean, there's still many farmers out there collecting their notes in field books. There are grain elevators doing tickets manually. Or things that really, imagine 80,000 pounds of grain turning up the elevator, you get a piece of paper. What other industry would that make sense in? So we're seeing, I think, a revolution occur, this information revolution occur in agriculture, and there are going to be investors and companies that do extremely well out of it. I'm not concerned about the deal flow.
Any other thoughts? We've only got a couple of minutes left, so let's look see if there are any questions from the audience. No?
In the meantime,
Oh.
I can add something else too.
Why don't you add one thing, and then we'll start.
Oh, okay. No. Just again, building on ARAMA's comment about, I think what he said about in the first slides about the maturing of the companies. As we see more dollar value, but in less companies, that means they raise more and they are more mature. So we see that also as kind of an important goal for us, at least, and a lot of the other companies we see, that plan A is build a big company and global domination, and if on the way there is a good way to partner with a large corporation that can get you faster to our vision of having this technology on every acre in the world, that might work, but first you have to be independent to go to that direction.
So,
So you were talking here about genomes and about biological sensors, deep learning. But probably a question to Raphael. What about old reliable innovation in chemicals, which is still expected to grow quite considerably?
That's a tough question. Okay, so I think that big companies right now are looking at, with the mergers occurring, which each company has seeds, chemistries, technologies. Okay, digital. Most of the big companies have digital offering, so you don't need to take notes right now, right? So everything is connected. I think where it's going is a more integrated approach of how you do agriculture. Okay, so if you can offer a farmer seed, the right chemistry, the right advice, and maybe the right way to manage his farm, reduce complexities to the farmer, and make it more efficient, I think that's will happen. Now, regarding your chemistries, yes, there are investments in discovery of chemistry, and that's again another place where new technologies like stronger computing power, AI, can help you develop better specific chemistry against specific targets. Okay, so that's happening, and I think in this area I totally agree with ARAMA. Okay, so
Quick one on that.
sure.
Real quick. In food, chemistry is also very important. Sugar is a molecule, and this is the #1 disease in the world. And yes, we see changes in the chemistry. For example, one of our portfolio companies is using computational protein design to design a molecule. I think the entrepreneur is here. To design a protein which is 3,000 times sweeter than sugar to replace sugar. So Gil, this is probably a solution to replace chemistry.